Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first sideways corrective structure where we expect price to continue the range, after which we expect Bitcoin to move to higher prices. In this particular scenario, we're looking for a WXY structure with inside wave X a flat in a 3-wave A, zigzag in a wave B, reaching the 0.9 Fibonacci taken from the low of W to the high of wave A, which is a minimum target for a flat and a common target for a regular flat, after which we then expect a 5-wave impulsive move to the upside in a wave C, where the most common target for wave C is between the 1 and the 1.236, which is between 38.1k and 38.3k, which is also just below the value area high of this range over here for a little bit of additional resistance at 38.3k, after which we then expect a move to the downside in a wave Y. The 0.618 is also a target for a wave C, but that is the target of a running flat, and a running flat generally is a lot more rare compared to a regular flat, so therefore preferred you see price moving up to the high of this wave X, this box here, after which we look for a wave Y, where wave Y can only then be a flat structure or a triangle because wave W over here is already a zigzag. If we look at the second corrective structure, we're looking at a triangle in this wave Y. So wave W is the same structure, is a zigzag. Wave X this time is already a finished structure in a zigzag. And then in wave Y, we are looking for a triangle structure. Now it is very early to call a triangle as we only have a first wave A to the downside. It can be counted as a nice zigzag to the downside though. And also the low of this potential wave A hit the 0.618. The 0.618 is pulled from the high to the low of W to the high of wave X and is a minimum target for wave Y. So that is good to see. And then after that wave A, we can only build higher lows for eventually continuation to the upside as well. Now commonly the target for a wave B, C, D and E is between the golden pocket and the 886 that you take from the previous wave. In this case from the high of A to the low of A, your common target of your wave B would be over here between the golden pocket 886, which is between 37.9k and 38.1k, where of course wave B has to be a 3-wave structure. 4 out of the 5 waves in this triangle have to be a zigzag structure, and wave A and wave B are most commonly simple zigzag structures. And if there is one wave that is more complex, usually it's wave C or wave D turning into a double or triple zigzag, or maybe even wave E into a triangle of its own. Now after this sideways structure, we expect price to move up, and preferably we also like to see bullish CVD divergences building as price is creating higher lows. In the third corrective structure, the final one as well, we are looking for another WXY over here. But in this case, we have zigzag W, that's the same, but we have a WXY in a wave X, after which we then expect a Y to the downside, which again can only be a triangle or a flat, because a wave W over here is already a zigzag. Now in this white wave Y, we are also looking for a triangle or a flat, because this wave W is then a zigzag, X is also a zigzag, so either we're going to be looking for a lower degree triangle over here, where you look for an A, B, C, D, E, after which we then expect continuation, or actually not yet continuation, after this Y triangle over here, we are looking for this bigger wave Y in then a triangle or a flat, or we're looking for a wave Y flat. And that is something that I think is very interesting. In an ABC, then a corrective structure to the downside, take the double bottom that price has made over here, because we do have a double bottom, as you can see here at the lows, low number 1 and low number 2, so that is quite interesting. Wick those lows and then look for a wave C to the upside, and then a flat ABC in the white wave Y, finishing blue X, and then we're looking for the blue wave Y, which either continues price moving sideways, or we're looking for a flat structure. If we then go to the bullish scenarios, this is the first bullish scenario. And this scenario would lead into a diagonal structure which follows the new diagonal rules of Elliott Waves, posted by Elliott Waves International. I'll upload a separate video about this. I covered it in a live stream recently, so I will cut that piece out and upload it separately. But here we then have a wave 1, 2, looking for a longer wave 3, longer than wave 1, 4 and 5 in still a contracting diagonal, where now wave 3 is allowed to be longer than wave 1. And the problem also is in a contracting diagonal where you're going to be looking for wave 3 shorter, being shorter than wave 1, is that wave 2 is so incredibly deep. It went to the 886, which is still a target for a wave 2 in a contracting diagonal, right? But the target taken from the low to the high of 1 to the low of 2 is this 1-to-1. And if you want your wave 3 to be shorter than your wave 1, it has to end lower than the 1-to-1. But in order for it to be a valid diagonal, it has to be higher than the high of wave 1. So you only have a margin of a few dollars. So in this scenario, what we are then looking for is a wave 3 to the upside, right? Higher and longer than wave 1, then look for a wave 4 to the downside, and then eventually a wave 5, still looking then for a contracting a diagonal to the upside. Very, very interesting indeed. And then finally, an impulse to the upside over here, where we are also just looking for a continuation to the upside in a straight line. Now, in this scenario, that would mean that this is the end of your corrective structure. So you have a move to the upside then in 5 waves, 1, 2, 3, 4, 5, and then you're looking for this to be the end of your corrective structure and continuation to the upside, which means either you have here a WXY, which then is a double zigzag, zigzag in W, X also a zigzag, and Y is zigzag. The problem, however, for wave Y is that the low of wave Y did not go below the low of wave W, which is what you want to see in a double zigzag. So that is actually not what we like to see. That invalidates a double zigzag as well. And finishing any other structure at this low is very, very difficult. There's not really any other way to count this structure nicely where this is the end of your corrective structure. It can be the low. If we're then looking for a triangle, you're going to make higher lows, right? But ending a corrective structure at this low at the moment has low probabilities based on the way price has shaped its corrective structure over here. If this would be your high or this would be your high, you already have a WXY in here where this would be the low and then a 1, 2, 3, but that's the diagonal we have, right? So it doesn't look probable or highly probable that this is your low and we move straight up to higher prices. The probabilities are higher to continue the range for a little bit longer. Now, if we look at the CVD divergences, we still got this bullish CVD divergence here, higher lows in price, lower low on the CVD. Target is this high over here. Has to be said that this bullish CVD is taken with an, I call it an in-between lows, like it's not the low of the move or, you know, a solid U-shaped, other way around, like bridge-shaped price action and then a low. It's literally a small little range. And this low, which already provided one bullish CVD divergence over here, which already has played out. So this is a second CVD, bit lower probabilities. We also have bearish CVDs locally, which you can see over here on the 15-minute. Lower high on price, higher high on yellow, and possibly also a higher high now on blue, because you shouldn't look here at the top of the blue line. You want to take the candle that made the high, which is the red candle. So red candle, move the cursor to the downside, and then the CVD matching that red candle is over here. And then if we look to the right, then we can see we have a higher pivot over there, right? So we have some bearish CVD divergences, lower high on price, higher high on yellow and blue, but keep an eye on the 3-minute as well. And also, by the way, the potential of an in-candle divergence, because if this candle is going to close green, but CVD is moving to the downside, it means there's more sellers than buyers in that candle, but still the candle closed green, which is an in-candle bullish CVD divergence, which would suggest price to move a little bit higher, but at the moment it's a red candle, CVD moving down. So what are we talking about, right? Bearish CVD divergences here locally. Just keep an eye on what is happening with the CVD. Now, if we then finally look at the probabilities of the different scenarios, then on the medium time frame and also the low time frame, we are still looking for price to take this high and reach the golden target box here. This red line is the point of control of 2021, 38.7K, very important indeed. At 39K, we have a weekly naked point of control. So we are looking for price to still move up, right? Nothing has changed since the beginning of this range, and price moving up and all that is still the same. But on the micro over here, looking for the range to continue in either this then flat structure, WXY, keeping an eye on the triangle as well, or this structure over here where we are looking for a WXY. So a little bit of a longer corrective structure if we also look at fib time taken from the low to the high of this move. And we toggle on over here the 1-to-1 and the 1.618, or maybe even the 0.618 and the 1-to-1, then you can see that if this would be the end of your corrective structure is before the 0.618. Now that's not a problem. It's absolutely fine for this to be the low and move up, but you know, commonly ending corrective structures between the 0.618 and the 1.618 would be nice to see, and all these more sideways corrective structures where we just continue ranging for a little bit longer would lead to something like this, right? So yeah, we also have a double bottom over here, which is always interesting. And just to have it mentioned, the support below 37.2 to 37.4k, so that is the blue box. And just one more additional level below the blue box, we have the current monthly point of control, but after today this level will become a monthly naked point of control, which is a very, very big zone generally. Like, it's an important level, so that's something to keep your eye on. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.